So let's start. Good afternoon, everyone. On behalf of board and the management team of ESCONET Technologies, I Rajneesh Pandey, Company Secretary and Compliance Officer to the company, extend a warm welcome to all our shareholders, investors, analysts, and other stakeholders who are joining us today. And thank you for taking the time to participate in our presentation on the financial performance of ESCONET Technologies Limited for the first quarter of financial year 26-27, together with an overview of our business, operating model, strategic priorities, and future outlook. So today's presentation is particularly very significant for us, and we are also pleased to have with us member of the company's senior management and board. So join us on the call today are Mr. Santosh Kumar Agrawal, Managing Director, Mr. Sunil Kumar Agrawal, Whole-Time Director, Mr. Vineet Agrawal, Whole-Time Director, Mr. Manoj Chuk, Independent Director and a highly respected industry veteran, and Mr. Keshav Parikh, Chief Financial Officer to the company. During today's presentation, we will discuss and we will take you through the significance of our voluntary quarterly disclosure initiative, company's strategic operating model, the sovereign stack, our quarterly one financial year 26-27 standalone and consolidated financial performance, the market opportunity, structural growth drivers shaping our business, and management's outlook and priorities for the future. We sincerely appreciate the continued trust and confidence of our investors, stakeholders, as we continue to build and strengthen an integrated technology ecosystem, addressing India's evolving digital infrastructure requirement. With this, now my privilege is to invite our Managing Director, Mr. Santosh Kumar Agrawal, sir, to formally welcome you and share his opening perspective. Sir, over to you.
Thank you, Rajneesh. Good afternoon once again to everybody joining us today, and thank you for your time to join on this investors call. On behalf of the management of ESCONET Technologies, I extend my sincere welcome to all our investors, stakeholders, shareholders, analysts, and other participants. Before we begin the presentation, I would particularly like to acknowledge the presence of Mr. Manoj Chuk, our independent director on our board, who has joined us today. Mr. Chuk is a highly respected technology industry leader with extensive experience and deep insight in the evolution of India's technology and digital infrastructure landscape. We are privileged to have the benefit of his industry perspective and guidance at the board level. I would now request Mr. Manoj Chuk, sir, to share a few words and his perspective with all the participants today, joining us today. Manoj, sir, over to you.
Very, very good afternoon and a very warm welcome on my own behalf. I'd like to thank Santoshji for this opportunity. First of all, it's a great honor, it's a great pleasure for me to be on the board as an independent director of ESCONET Technologies Limited. I've had a long association with this firm through my professional journey, and therefore I think it's a great honor for me to have this opportunity of being more closely associated with the firm. Over the last 4 decades, I have been privileged, I have been greatly honored to have built and influenced the construction of India's internet infrastructure and information infrastructure. I've seen this journey. I have put a few bricks in the wall, if I would say, and therefore, having been a very, very key player in terms of this new world of digital, if you will, I particularly believe that we are at a very interesting time. Over the next 20 to 30 years, India is going to see the build out of our digital sovereign stack. And it is very, very important that we have homemade firms which are deeply anchored in India, firms which are owned and controlled by Indians who build this sovereign digital stack. And I think that is the cornerstone at which we stand today. And we have a huge opportunity of making a big difference. Given the fact that as an organization, we cover every element of the stack, I think that we are uniquely positioned to make a very big difference. And I would say with great confidence here that as we look at the next many years ahead, ESCONET Technologies Limited is very well positioned because we play at every key element of the stack, and I'm sure the management team will take you through that. I am also very privileged to watch at very close quarters the quality of corporate governance. The fact that all of us are seeing an organization which is not obligated to announce quarterly results, stepping out of the crease, as they say, and doing it voluntarily, doing it on its own. And that is where trust begins. When you start doing things which are not obligated, but you believe you need to do in the spirit of transparency. I have said it earlier and I'll say it again. I think the quality of governance that we see in this organization is of the highest levels. I'd like to end by saying that the numbers speak louder than words. And I'm sure that the management team will continue to do its best to deliver on superior results. And that clearly is a signal of continued improvement in terms of execution. I don't want to steal the thunder, but I would like to end by saying that the broader opportunity that we see in our country of the need for organizations who can build the digital sovereign stack, organizations that can be trusted from a governance perspective, and organizations that have the ability to execute in a superior fashion. This troika, when it comes together, will help India achieve its vision of Viksit Bharat. And I'm sure that ESCONET Technologies will do its bit in helping India become Atmanirbhar. Santoshji, with that, back to you. And a great honor to be on the board.
Thank you, Manoj sir, for sharing your valuable and insightful perspective with all of us. We truly appreciate your thoughts and your continued guidance. I would also like to acknowledge my fellow board members and our senior management team who are joining us on this call. Today, it is an important occasion for the company as we present the first quarter for FY 26-27 financial results and outlook through our first voluntary quarterly investor presentation. At ESCONET, our vision is evolving beyond our traditional role of a system integrations company. Our strategic ambition, which we refer to as the sovereign stack, is to build an integrated India-focused technology ecosystem capable of addressing the complete technology requirement of enterprise, government institutions, and over time international markets as well. The objective is to bring together complementary capabilities across infrastructure, cloud, cybersecurity, and systems integration, enabling us to offer customers a more integrated and comprehensive technology proposition. Today, we will take you through the strategic thinking beyond this model, our financial performance for the quarter, the progress made in strengthening our operating platform, and the opportunities we see ahead. So with that introduction, let us begin the presentation. At ESCONET, we have evolved beyond being only a system integration company. This presentation covers the unaudited financial results of the quarter ended June 30th, 2026, which were declared on 12th of August, 2026. Our presentation is built around what we call the sovereign stack, an integrated technology ecosystem comprising 4 key capabilities: compute and hardware, cloud, cybersecurity, and systems integration. These capabilities are brought together to enable us to offer customers an integrated technology proposition rather than operating us as a collection of independent verticals. The objective of today's presentation is to provide stakeholders with a clear understanding of our Q1 performance, the underlying business model, and the opportunities that management sees ahead. Let me begin with what makes this quarter particularly significant from the governance and investors communication perspective. Ranish's slide here. Before we proceed further, I would request all participants to kindly take note of the safe harbor statement contained in the presentation. Certain statements made during the presentation, during today's discussion may be forward-looking in nature. Such statements are based on management's current expectations, assumptions, and assessments, and are subject to various risks, uncertainties, and other factors. Participants are requested to read these statements together with the risk assumptions and qualification contained in the presentation. With that, let us move to the next slide. We consider this as an important milestone in our company's journey. While NSE SME listed companies are generally required to report their financial performance on a half-yearly basis, management has taken a conscious decision to move beyond the minimum reporting requirement. This decision has been driven by simple principle. Our investors and stakeholders should have timely access to relevant information regarding the company's performance and progress. Accordingly, from 26-27 onwards, we intend to maintain a quarterly reporting cadence covering Q1, Q2, Q3, and Q4. This initiative represents first voluntary disclosure. We are going beyond the applicable minimum reporting obligation as a matter of governance choice. As an investor-first approach, this is a direct response to the shareholders and investors' demand for more frequent and timely disclosures. A continuing quarterly communications framework. Our objective is to establish a regular framework through which stakeholders can track the company's performance throughout the financial year. We believe greater disclosure helps reduce information asymmetry and enables the investment community to better understand our business trajectory. With that context, let us now look at the operating model that underpins our strategic direction. Today, we operate through a fully integrated technology ecosystem comprising 4 complementary layers. First is the base hardware infrastructure through our own brand Hexadata. Our indigenous computing infrastructure business focuses on servers, AI systems, GPU workstations, and high-performance computing platforms. Or rather, we call it supercomputing platforms. Second is the sovereign cloud through our subsidiary company zCloud. Our cloud platform focuses on infrastructure services, backup solutions, disaster recovery, and compliance-driven hosting requirements. And third is our cybersecurity through our another subsidiary company, Fluidic, our specialized cybersecurity platform providing consulting, security operations, governance, risk and compliance services, which is typically called as the GRC space in this industry. And fourth is the system integrations through ESCONET, our core strength bringing together hardware, cloud, and security capabilities into complete enterprise solutions. The strategic value of this model lies in the fact that these layers are intended to work together. Our objective is to offer customers an integrated proposition spanning infrastructure, cloud, security, and implementation. For the detailed financial walkthrough, I would now like to invite our Chief Financial Officer, Mr. Keshav Parikh, to take you through the Q1 FY 26-27 financial results. Keshav, over to you.
Thank you, sir. Good afternoon, everyone. I will now take you through the financial performance of ESCONET Technologies Limited for the quarter ended 30th June 2026, along with the revenue composition, consolidated financial performance, and key ratios. So I will begin with the standalone performance for quarter 1, financial year 26-27. I am pleased to report that the company has commenced the new financial year with healthy operating momentum. For the quarter ended 30th June 2026, the company reported the following standalone performance. So total income of 62.98 crores. This comprises of revenue from operation 61.08 crores and other income of 1.90 crores. The quarter profit before tax stood at 9.36 crores. After accounting for current and deferred taxes, profit after tax for the quarter stood at 6.83 crores. Rajnish, slide change. Both basic and diluted earnings per share for the quarter stood at 5.18. Overall, the quarter one performance reflects healthy momentum as we enter financial year 2026 and 27. The financial results should also be viewed in the context of the investments and operating groundwork undertaken during financial year 25-26, as the company continues to strengthen its capabilities across the broader sovereign stack. I will now take you through the underlying standalone statement of profit and loss. So moving to profitability, this slide represents the this slide presents the standalone statement of profit and loss for the quarter ended 30th June 2023, alongside the full year financial performance of financial year 25-26. For quarter one financial year 26-27, revenue from operations stood at 61.07 crores. Other income stood at 1.90 crores. Total income stood at 62.98 crores. On the expenditure side, purchase stood at 48.45 crores. Changes in inventory is 5.18 crore minus. Employee benefit expense stood at 1.94 crores. Financial cost stood at only 7.32 lakhs. So depreciation amounting rupees 25 lakhs. Other expenses stood at 8.07 crores. So total expenses for the quarter stood at 53.62 crores. This resulted in profit before tax of 9.36 crores and profit after tax of 6.84 crores. One important feature of this quarter is the low level of finance cost, which reflects the improvement in the company's financial position and the repayment of the working capital facility, which I will discuss in greater detail shortly. So let me now provide some additional context on the quality and composition of revenue generated during the quarter. Our total income is 62.98 crore, was substantially driven by core operating activity. Of the total income, 61.08 crore was revenue from operations and 1.90 crore was other income. The core operating revenue reflects activity across our technology business, including hardware and infrastructure supply, cloud services, cybersecurity mandates, and system integration project execution. Accordingly, the focus is not only on top-line growth, but also on the conversion and productive deployment of operating resources to support revenue execution. So I will now move to the consolidated financial performance of the group. On a consolidated basis, the quarter one of financial year 26-27 results reflect the broader operating activities of the group. For the quarter ended 30th June 2026, revenue from operations stood at 11,632.69 lakhs. Other income stood at 193.21 lakhs. Total income stood at 11,825.90 lakhs, equivalent to approximately 118.26 crores. After accounting for expenses, profit before tax stood at 8.99 crores. The presentation further reports profit before minority interest of 6.49 crores. Profit after minority interest of is 6.57 crores, and consolidated basic and diluted EPS stood at 4.98. This consolidated figure provides a broader perspective of the group performance across its operating structure. I will now take you through some of the key consolidated ratios. The key ratio for quarter one financial year 26-27 provide useful context to the consolidated performance. Profit before tax margin stood at 7.61%. Profit after tax margin stood at 5.56%. EBITDA margin stood at 8.55%. Effective tax rate stood at 27.1%. This quarter also reflects the lean cost structure related to the scale of operations. Employee cost ratio is 1.98%. Finance cost ratio stood at only 0.06%, reflecting the substantially reduced finance cost burden. Consolidated basic and diluted EPS stood at 4.98 for the quarter, compared with 4.66 rupees for the full financial year 25-26. The comparison should naturally be viewed in its appropriate context, as quarter one financial year 26-27 represents a single unaudited quarter, whereas the comparative financial year 25-26 figure represents a full audited financial year. The key message is that the group has entered the new financial year with a stronger operating and financial base. To summarize the financial discussion, Q1 of financial year 26-27 has provided a strong beginning to the financial year. The company has delivered a healthy standalone performance. The group has demonstrated meaningful revenue scale, and financial position has benefited from reduced finance costs and continued working capital decision. We believe that operating groundwork and capability investments undertaken over the recent period have created a stronger foundation as we move forward. With this, I would like to hand the presentation back to our Managing Director, Mr. Santosh Sir, who will take you through the strategic opportunity landscape, business priorities, and outlook. Santosh Sir, over to you.
Thank you, Keshav. The financial performance provides the foundation of the next part of our discussion. I would like to focus on the broader opportunity landscape, the structural demand drivers relevant to our business, and our priorities as we move through the financial year. The technology landscape continues to create significant opportunities. Key structural growth drivers include artificial intelligence infrastructure, which is increasing adoption of AI, resulting in accelerating demand for GPU computing and advanced infrastructure. Another key area is data sovereignty. Government regulations and enterprise requirements are driving demand for secure domestic platforms. The third one being cybersecurity. Increasing digital threats are expanding security spending. And cloud adoption. Enterprises are moving towards hybrid and sovereign cloud environments. The cloud adoption is further being driven through the earlier discussed initiatives like data sovereignty and cybersecurity. And lastly, digital transformation. Government and enterprise continue investing in modern technology infrastructure. These trends align strongly with our sovereign tax strategy. Next slide, please. As we enter 26-27, our priorities are clear: to improve on our bottom lines, which is profitability. Our focus will be on margin improvement, operational efficiency, better business mix, higher contribution from scalable platforms. We will continue to strengthen Hexadata, expanding our indigenous computing portfolio aligned with AI and HPC demand. We remain optimistic about opportunities ahead and believe our integrated platform positions us strongly for substantial growth. Scalable cybersecurity business. We aim to accelerate Fluidic growth by leveraging its differentiated capabilities. We are also in the expansion phase at zCloud and targeting METI empanelment, which remains a key milestone for unlocking government and regulated sector opportunities. To conclude, Q1 FY 26-27 represents an important beginning for the financial year for ESCONET Technologies. This quarter is significant not only because the financial performance reported today, but also because it marks the beginning of our voluntary quarterly disclosure framework. Our key messages today are clear. First, we have taken a conscious step towards enhanced transparency and more regular investor communications. Second, we have entered 26-27 with healthy operating momentum and as reflected in our Q1 standalone and consolidated financial performance. Third, the company's financial position has benefited from continued attention to working capital and significant reduction in the finance cost burden following repayments of working capital facility. Fourth, we continue to build around a clear strategic model, the sovereign stack, bringing together hardware, cloud, cybersecurity, and system integration. And finally, we continue to see a meaningful opportunity environment driven by the growth of AI infrastructure, cloud adoption, data sovereignty, cybersecurity, government digitization, and enterprise technology modernization. We remain focused on disciplined execution and on building sustainable long-term value for our shareholders and stakeholders. On behalf of the board and entire management team, I would like to sincerely thank all of our shareholders, investors, customers, partners, and employees for their continued trust and support. With that, I would now hand the proceedings back to Rajnish to moderate the question and answer session. Back to Rajnish.
Thank you, sir, for the comprehensive presentation and sharing the management strategic priorities and the outlook. We will now open the floor for question and further interaction with the management team. The participants who are joining here may raise questions relating to company's disclosed financial performance, business strategy, operating environment, and matters covered in today's presentation. We would request participants to kindly keep their questions concise so that we can accommodate as many questions as possible. And the management team will endeavor to address questions based on information that has been publicly disclosed and can appropriately be discussed in this forum. Where a question relates to commercially sensitive information, specific customer discussion, prospective transaction, or matters not yet publicly disclosed, the company may not be in a position to provide specific details at this stage. With that, we will be happy to take the first questions. So we'll now start the question and answer sessions. The attendees can raise their hands.
We already have a queue of.
I think already we have 4 to 5 raised hands. So we will start with Deepak Poddar. So Deepak, you can just unmute yourself and ask your questions.
Yeah, I'm audible.
Yeah,
Yes,
you're
you
audible.
Okay, great. Thank you very much, sir, for this opportunity, and many congratulations for good set of numbers. So I was just trying to understand first up on
Mr. Deepak, can you be a little louder?
Yes. Yeah, it's better now.
Yes, now it is much clearer.
Okay, great. So just wanted to understand, I mean, the three new segments: cybersecurity, cloud, and Hexadata. So that can also be categorized as a system integration only, or is there any product also we are trying to build there?
So first, I'll answer your first query, or I'd like to make some corrections here. These are not new verticals, although Fluidec is a new acquisition which was acquired in the beginning of financial year 24-25. But zCloud has been in operation since 2021 or 22, and Hexadata has been into existence since 2018. These are nothing new. So let me explain you what exactly Hexadata is. Hexadata is the brand for our hardware products which we manufacture. And the hardware products comprise of servers, which include AI compute, AI-enabled servers, workstations, and data storage systems, which we sell as under Make in India program to government, public sector, and enterprise customers. Fluidec is specialized into cybersecurity, and zCloud has built up its own platform where it provides cloud computing services, and the company is involved purely into cloud services only. It does not sell any kind of hardware or products. ESCONET Technologies, as its core business, does the system integration in case if there are multiple components which are required to be integrated by a customer. ESCONET takes that as an end-to-end project and executes it.
Okay.
Did I clarify your?
Yes. And in Hexadata, the hardware product we are manufacturing in-house?
Yes, we are.
Okay. And in case of the zCloud, the cloud computing services that we are giving, so we are sourcing somebody else's cloud, or the cloud belongs to us only?
So we have invested heavily in zCloud, where we have built up a complete grounds up cloud platform through which we provide services, and it's our own cloud where we buy our own set of hardware. We utilize maximum of our own software, although we do buy we do outsource certain software licenses from other OEMs as well on it. But majority of the software stack has been built by our in-house team, which is being utilized to run C Cloud.
Okay, that's pretty clear. Okay, understood. And my second question is on your margins. We saw a very strong improvement in your EBITDA margins. So how sustainable is that? I think you also mentioned that we are looking to improve profitability as well. So what would your aspiration be?
So the current margins reflect not only proper execution and right strategy which went into place, but also it reflects the current market conditions. The hardware price volatility has played some role in building up these margins. And for the current financial year, we feel that these margins are pretty much sustainable, and the coming quarters will also reflect similar sentiments.
Okay. Okay. But how much would be the benefit of this hardware price fluctuation that you would have benefited because
I may not be in a position to quantify exactly what is the percentage or the amount of contribution towards the hardware price volatility in the profit ratios. But yes, there is some impact of the hardware price volatility as well. I would not deny that fact.
Understood. And that you expect to continue in FY27 at least.
At least FY27, and as per the industry analyst experts, the trend may continue in FY28 as well.
Yeah, I mean that's what I'm saying, that next 1.5 years at least, so this high price trend will continue.
Correct.
Okay, and just one last thing on the growth. How should one look at growth for this year or next year?
So you have already observed the numbers for Q1, and at least for Q2, I can predict and I can tell you that the pipelines are good, great, sustainable. The bottom lines will also, and we are trying our best to maintain the same momentum of profitability for Q2 as well. Q3 is yet to come, but yes, the long-term pipeline is also, as of today, appears to be very, very healthy. However, there are always unforeseen circumstances. We have seen out of the blue wars happening and supply chains getting disrupted, and nobody has a control. So that kind of force majeure situation may disrupt anything which nobody may have control over it.
Correct. Correct. Got it. And there was one data which was missing, which I could not find. This 116 crores revenue this quarter. So what is your YOY number? I mean, what is the growth number in first quarter?
I think there is some mistake. The revenue is 61 crores, if I'm not wrong. Correct me if I'm wrong, Keshav.
I'm talking on a
consolidated basis. It is 116.
Sorry?
On consolidated level, it is 116 crores.
Correct. Okay. Got it.
So what is the growth in this 116 crores? What is the growth on a YOY basis?
What is the growth?
Yes. So what was your 1Q?
Sorry to disturb you, sir. So this is actually our first quarterly result. So we cannot actually compare it as comparable figures for the last quarter or what the growth rates are there. So this is first time we are already talking. Now onwards, we are going to compare this quarter with the next one, and so the same thing will go on.
Okay.
But right now it's not comparable.
Okay. I got it. Okay. Understood. I think that would be it from my side. Yeah, thank you very much. All the very best.
Thank you.
Next, please.
So next is Mansimar Singh Sethi. Please, you can just unmute yourself and ask your questions.
Hello, am I audible?
Yes, you are.
You are
Okay.
audible.
First of all, Santoshi, thumbs up to the entire team for the wonderful result. Now I wanted to ask regarding you discover the margins. So I just want to know whether the margins will be sustainable at 7%, on the consolidated balance sheet on the consolidated basis
See,
for
this
this year?
quarter, whatever figures have been there during my previous interaction also, I have mentioned that Q2 pipelines appear to be, I can say that Q2 financials looked similar to me as what Q1 is looking at. The Q1 numbers are out. Q2 is still running, but Q2 also looks similar. The pipelines are strong, top line should be better, and bottom lines I expect at the end of the quarter should be similar to what Q1 could be, with a small variation could be here and there, but similarly. Q3 and Q4, yes, are slightly unpredictable as of now, but overall, from analyzing what the industry experts are saying, I feel the momentum should continue in Q3 and Q4 as well.
Okay, thank you, sir. Now, my second question is with respect to R&D cost. How much is our R&D cost?
R&D cost is right now is very less in ESCONET. For R&D is towards whatever we spend goes only towards Hexadata. The rest, their respective OEMs consume their own. They have their own R&D divisions and they consume. They invest in their research. So ESCONET does not have to contribute to any research on that side. Looking at the total revenues, it might be hardly be less than 2% of the total revenue, which goes towards R&D as of now in ESCONET. On zCloud, the R&D cost might be slightly on a higher side because the software development actually takes up a lot of cost, and we are still in the mode of development of that software. Majority of the stack has already been developed, implemented, and is running successfully there. But the development cycle continues. We cannot stop that development cycle. Even after the product has been completely developed, thereafter also we have to keep on maintaining it. So that's a continuous cost. Since zCloud is a very small company as of now, overall top lines are as compared to ESCONET are insignificant, but in percentage terms, the R&D cost or the development cost in zCloud would be much higher there.
Continuation to this question only. My question is to Keshav Ji, the CFO. Keshav Ji, what is with respect to our accounting principle with respect to R&D, whether we are expensing it or capitalizing it right now?
So since it is a very small amount in percentage, so we are expensing it as a revenue expense.
So in future also, in the sense, we'll be doing it with if suppose after 2-3 years per se, our R&D cost increases, what accounting principle will be expensing that only on a conservative basis, or what we'll be doing?
So for current year, till current year, we are preparing a financial as per the accounting standards. So this standard provides us as per our estimates, and for future year, we will be moving to Indo-AS if after 2-3 years. Then the Indo-AS will be applicable, and then we might probably then we have to be capitalized that.
So if there is a major significant cost in developing or researching a particular product, we may need to capitalize, which the decision will be taken at a future time and appropriate disclosures shall be made.
Okay. And Keshav Ji, with respect to our cash flow from operations, because since there is no balance sheet provided as of now in this quarter, can you tell me with respect to our consolidated 116 crores of revenue, how much was our cash flow from operations?
In numbers, I cannot tell here only, but it is on positive side.
In the sense, how much percentage wise you can say? Can you give a number on? I don't want a number, but percentage wise, how much of that revenue is not on a accrual basis but on a cash basis?
So it is 5% around.
Only 5% of our revenue is has been in operations, CFO. Don't you think like we have to work more on converting our revenues into cash?
We are working out towards that now.
Santoshji, any guidance on this? Like how we can improve our operations, cash flow from operations?
See, cash flow from operations are being right now being reinvested in the business. We are not.
But that will be a capital investment now. If you are
No, there's
reinvesting.
no. I'm not saying capital investments. Our inventories, if you see, inventory levels have been increasing quarter on quarter. Even if you pick up last year's or last to last year's balance sheets, H1, H2, you'll see the inventories keep rising. And those inventory levels have actually contributed to some extent to our margins as well.
Okay. Okay. Thank you. I'll join back the queue. Okay.
So now I will ask Prashant Pandey to unmute himself and ask his questions. Prashant Pandey, please unmute yourself and ask your question. I think he is not able to do that. So
Ranish,
moving forward with TC Thomas, you can just ask your questions.
Mr. TC Thomas, you will have to unmute yourself.
Yeah, good afternoon, everybody. First of all, I congratulate the entire management team, Santosh ji, and the industry veteran, our independent director, Sri Manoj, for an excellent performance for this quarter. I make it a very small my question. India is becoming a global leader in GCC and also major player in data centers and also the artificial intelligence. How are you taking the steps to capitalize these opportunities for this for our products? Because our products in the system integration, cyber security, hardware, infra, and cloud. So it's a very good opportunities are available. I just like to know what are the steps the company is taking for the, capitalizing these opportunities available for next many years to come.
Manosa, since you have a good overview of our overall business, would you like to take this question?
Yes, thank you very much. So I think, Mr. Thomas, there are three legs to the stool that you mentioned. I'd like to begin with AI. When you look at AI, as you know, AI begins at the fundamental layer of having the right kind of infrastructure, compute infrastructure, which can support the models, inferencing engines, and the data itself. And that is what we make when we start looking at
your voice is
data.
cracking.
Can you hear me? Am I okay now?
No, your voice is breaking in between.
Can you hear me properly now? Am I audible? Okay, let me try. Yes. Mr. Thomas, let's begin with AI. Our focus on AI, as you know, is at the most critical layer, which is the compute layer. And this is where we build our own hardware platform, Hexadata. And on Hexadata, you can run a variety of models, inferencing engines, as well as data lakes. So I think that this is a very solid layer. And the important thing is that this layer, certainly from a sovereignty perspective, should be owned and controlled by Indian firms. So I think ESCONET is very well placed as far as that is concerned. When you start looking at data centers, it is the ability to integrate a variety of different elements, again, starting with compute, going to storage, onto the network, and then cybersecurity. And as you know, ESCONET has been in these businesses for many, many years. So our ability to integrate and deliver a very strong solution, particularly in today's day and age, where it's not just about mega data centers or hyperscale size data centers, but also about private clouds, because more and more organizations are recognizing that they need to make sure that the data is protected. You know of all the cybersecurity incidents that are happening day in and day out. So therefore, ESCONET's classical systems integration capability, some of the hardware platforms that we build on our own, and the partnerships that we have created with everyone who kind of is an important player when it comes to the building blocks positions us well. So Santoshi spoke about hybrid clouds, which today form the core of a lot of the data center infrastructure, particularly within large enterprises. So that's another area where we play. GCCs is an opportunity, just as enterprises are an opportunity or the government sector is an opportunity. So GCCs also obviously offer us an opportunity to be able to go and offer our various solutions across the four legs of the stool that we spoke about from an end-to-end sovereign infrastructure and stack perspective. So I'd say that all these three elements are important. They are growth drivers for us, and certainly they provide us an opportunity to do even better going forward in the future. We need to make sure that we pick and choose our battles. We can't do everything because some of these projects, as you know, Mr. Thomas, are very capital intensive. So here it's not about market opportunity. It is about our ability to be smart enough to pick and choose the right ones to go after. Thank you. Thank you for your question.
Thank you very much, sir. Thank you, sir. Thank you.
Next, please. Rajnish.
Am I audible?
Yes.
Sir, can we 500 crores target this year and tell me are there any fundraising plans this year?
So, sorry, I'm not able to see who's speaking, but anyways, I'll answer that question. I'll answer the second part of the question first, which is fundraising, I believe, what you said, asked for. So in the current financial year, there are no plans to raise any funds. That's a clear no from us till now. And secondly, 500 crores. I think if you joined the last investors call, which happened after the financial results announcement of 25-26, the management had a very clear view that the next year would be a year where we will not focus on top lines. We will focus only on margin building because we had enough top line growth in the last 3 years and we had missed the bus on the bottom lines. So we changed our strategy exactly to that. And here is the result for Q1, where we have improved the bottom lines and we'll continue to focus on the bottom lines for this financial year. So whether it 500 crore happens or not, I should not be commenting on that. But yes, investors do want returns of their investments, and I believe that it's high time that they should get it.
Okay. Thank you for your time. Okay.
Thank you. So Rajnish, in the meanwhile, there are some chat messages happening where people are asking specifically 1 or 2 questions again and again. Shall I read them out? And so Mr. Abhishek Singh has asked, congratulations on great set of numbers and quarterly disclosures. I have the following question. What drove the improvement in margins? I think we have already responded to that question in earlier conversations. So I'll skip that. Update on zCloud MATI empanelment. Is the process started? Any timelines for official confirmation? The MATI empanelment process is a 2-part process. First, we have to go for internal assessments and internal certifications. The process is already on. Internal certifications process is already running as of now, which we hope to complete in the next max 2 months' time. By September end, I hope that we should get all our ISO certifications done. Once those are done, we shall apply with MATI for which is a process of at least 3 to 4 months, I believe. So within this financial year, we should get that good news anytime. And An update on zCloud and strategic investment by stake sale as mentioned earlier? I could not get this. We do not intend to sell any stake as of now on zCloud. Any plans for zCloud to start GPU renting business like E2E? At the moment, no, but nobody can predict the future. We might come into that because since it's a high investment business, we are restricting ourselves to the current traditional CPU based computing as of now. But yes, we do want to jump into the GPU computing part. As and when we progress, we shall disclose it. Again, another question which is regarding MIDI empanelment only, which I've already answered. Can you please share the proportion of Q1 revenue and order book of Hexaware where AI GPU orders with Blackwell, Cooper, etc.? Sorry, we do not have that breakup numbers as of now, detailed financial numbers. We are not in a position to comment on that as of now. What is the split between recurring revenue in the cloud business and order book for the hardware business? Cloud business as compared to the overall revenue is very, very small. If you see the financial balance sheets or the P&L accounts of financial year 25-26, you can make out the ratio, and it is still running in the same ratio. The ratio might change only once we get a panel to MIDI where we get significant growth in the cloud business, which is expected to complete in this financial year. For ESCONET system integration business, can you share the revenue breakdown between Hexadata and third-party hardware? Keshav, I don't think we have those numbers. Do you have any kind of breakup of Hexadata versus non-Hexadata business? What we did ready at hand?
No, sir, we don't. That's ready at hand.
Okay. So, Rajnish, anybody else? The rest, all questions are similar, I believe. I see one more question. What do we see company in the next 3 to 5 years in terms of scale and margin profile? I would not want to comment today on that. Let the right time come and we'll definitely try to predict that.
One more question is sir, from Tarun that what is the current order book as on 13th June and
30th June, as of 30th June, the order book, see, we do not have an order book model. And why don't we have that order book model? I'll tell you, because the execution time frame of an order is very, very short. Typically, once we submit a proposal or a bid or a quote, from that day till the time the order gets fulfilled, normally it is a typically 60 days to 90 days cycle. The order gets billed out. Beyond, once the billing happens, typically within 30 to 90 days time, the payment is realized. So the order books do not present traditional EPR business and other businesses where companies get an order which needs to be executed in the next 3 years time frame, quarter by quarter, year by year. That is not the case with us. So our order books will always look very, very small, but overall numbers will be much better. So on 30th June, if I do a guesstimate, our order book might be standing at somewhere close to around 20-25 crores, not more than that.
And the next is actually one is the Ravi Pai is asking that if it is possible to share split of revenue along with growth percent compared to previous quarters. So I will reply to that. So this is our first quarterly reporting. On going onwards, we will actually give you the comparable figure for the Q1 versus Q2 and Q3 and year on date. And the next question from Ishan is, can you share flavor of revenue we are getting from Singapore?
Keshav, do you have the Singapore top line numbers?
Sir, revenue from Singapore is approximately 53 crores.
Yeah. So that's what he has guessed, I believe, which is correct figure.
That is correct. And one more question of Chinmay Samant. Where do we see our company next 3 to 5 years in terms of scale and margins profile?
So 3 to 5 years, we would be there. We would continue to grow. And I cannot say beyond anything beyond that. We would continue to grow quarter to quarter and year to year. Until unless there is a atom bomb dropping on our head, right?
So now onwards, I will just unmute. Tarun, you can just unmute yourself and ask your questions. Then we will come to next two participants.
Hello, am I audible?
Yes.
Yeah, first of all, congratulations on a good set of numbers.
Thank
I
you.
wanted to understand, I saw one of your disclosures saying that you have a order pipeline of 100 CR. So that is for your hardware business, correct?
Yes, if it is 100 CR value, it is for hardware or software. Hardware plus software included. But that may not be anytime soon. It may be probably sometime in the previous year.
Okay, got it. And the partnership that you have with NVIDIA, is it that you're going to supply the NVIDIA GPUs to customers, or how is that arrangement going to work?
So the partnership entails where we get access to not only the NVIDIA hardware, but NVIDIA software stack and the technology stack, plus the roadmap in confidential roadmap which NVIDIA shares with its partners on what the future in technology is coming like with, which enables us to create hexadata servers or to design servers well ahead in time. By the time the GPUs are available for start shipping from NVIDIA, our platform is ready to accommodate them. We buy NVIDIA hardware from the NVIDIA channel and we integrate them within our own hardware and then supply to our customers, which not only could be the NVIDIA chips, but beyond chips, the software stack also.
Okay, so have you got any customer interest for that kind of hardware and software layer? Do we have any visibility on that?
What do you mean by customer interest?
So as in the NVIDIA stack, which you're saying where you can, create your software layer and then sell customized solution. So are
We have been doing that business since so many years, and we continue to do that. We have multiple customers for NVIDIA GPU-enabled servers. We do that. We ship those kind of hardware on a run rate basis, on a month-on-month and quarter-on-quarter basis.
Got it. One last question. What is the revenue guidance that we can expect for FY27?
Hard to predict, but may not be very different from what we did previous year.
So we should expect around 30 to 40% growth or more than that?
Sorry?
We should expect how much? 30 to 40% growth over FY26?
You are not audible at the moment. Hello.
Is it better? Is it better now? Hello? Is it better?
Hello?
Hello, is it better? Hello?
Yes, now you are audible.
Yeah. So just wanted to know how much revenue growth we should expect in FY27 over FY26.
Growth in terms of top line revenue, if you are asking, if that is your question, I have answered that question. We are not expecting anything much significantly bigger than what we did last year. As I said in my previous call as also, that FY26-27, we will not be focusing on top lines. We will be focusing on building up margins.
Okay, so I think I heard you before that you will be maintaining the margin, so we can expect the same 7% margins, correct?
Yeah, we will try, definitely give it a try to keep this momentum going of Q1. It could be 7%, it could be 6%, it could be 5%, it could be 10% also. And we would actually try to improvise it. It's not that 7% restricts that. There's no restriction. But given the dynamics of the business, we will try to build up healthy margins in this financial year, and rather than focusing on top line deals only.
Got it. Thank you so much.
Thank you.
So next is Mohit Bansalji. You can just unmute yourself and ask your question with the management.
Yeah, hello. Good evening, everyone.
Good evening.
Yeah, Santoshji, my question for you is how much business dependency is there on government in terms of order percentage or in terms of wider regulations also, like data localization or sovereignty? Like suppose tomorrow there is change in government or its policy where it opens the business to foreign investors, and how much we can compete with foreign investors, or sorry, foreign competitors, and how much we are prepared for that?
So, Mohit Bansaji, we are actually competing already with foreign vendors, be it Cisco, be it HP, be it Lenovo, be it Dell. We actually partner with them also. We do sell their products and brands, as well as we compete with them also in certain deals. It's a case-to-case basis scenario. So, what do we need to get ready to compete with them? We are already there.
Okay.
We don't need to get ready there to do that.
Okay.
That is one thing. Your initial question was how much dependency on government business. So we are not dependent on government business, I would say. Although we do a significant amount of government business. Till last year, our government revenue was typically around 40 to 45%, which would include government, not only directly government ministries, but also includes public sector units, which are government owned. So that was our revenue split for last year. Current year, government business has been lower, but we are hoping for a better government revenue this year also, since we are targeting slightly higher value bids for the current financial year in the government space.
I got it, sir. Thank you.
Thank you. Mr.
Ashish
Manani. Ashish, you can unmute yourself. Probably is not there.
Next is Mansimar Singh Sethi
Hello,
again.
am I audible?
Yeah.
Yes, Ashish.
I was having some issue. I'm sorry. Yes, Santoshji, congratulations on good set of numbers. I just wanted to understand, in your last phone call, you had mentioned about, developing your own stack, Z stack, on which you have been working. And also for Hexadata, to scale further, you would need your own HPC orchestration platform. So I just wanted to understand from you on the tech side, where have you been working, in what direction? And on Z Cloud, I believe we have made some investments. Can you please elaborate a little bit on the tech capability that we are trying to build in?
Sir, just one thing, Mohit, your voice is actually not audible, and not. You can just make it little bit more loud so we can understand what you're saying and what asking.
I'll repeat the question what Ashish said. I think I captured it a little bit. Ashish wants to understand as to where are we placed now on the Z stack front, which is the stack for the cloud, Z cloud. We were developing for Z cloud, and secondly the orchestration layer for Hexadata HPC platform. So first I'll answer the Hexadata part. Hexadata HPC platform version 1 is ready to ship to customers. We have already been doing POCs and demonstrating it to our customers, to relevant customers, and hope to ship it out commercially very soon, as soon as we get our first orders. I'm not sure whether we may have already shipped it already to one or two customers also. So that version 1 is there, but there is a lot of scope of improvement in that product, and the development continues on the HPC orchestration layer. Secondly, on the Z stack front, Z stack, the orchestration layer is complete. It's already into production right now. Customers are utilizing it. Only the observability module is pending, for which we have already been using some other third-party tools as of now, so which is not blocking our operations. As soon as our own product is developed on the observability stack, we shall replace the existing paid tools with our own stack, and we are done. So rest everything is already in place. The security piece, the logging piece, the identity and access management piece, the virtualization layer, everything is already in place. Any customer wants to do a POC or wants to see a demo, we are ready with that.
Okay, and I just wanted to understand, you had mentioned on Concall in last year that, Exadata has been your key driver in terms of your standalone revenues, and, that is also growing significantly faster. And you were told it had gross margins approximately 14-15%, or, double of what you make in a rather system integration with some other vendor. So that, I believe, would lead to margin expansion, and you had also acquired Fluidic back then. And zCloud was already in production. You expected them to scale, and I think those businesses have much more better margins, around 20-25%. So if you can just quantify where we are in terms of scale, in all three verticals. I don't need exact numbers, but like zCloud, how much is it contributing right now? And at least in the full financial year, how much do you expect it to, contribute? And even in Q1, if you could give that split a little bit for us to understand how that has scaled, both Exadata as well as zCloud.
Correct. So, Ashiji, now I remember correctly what I had said. Last year we started investing in zCloud. Basically, we were creating zCloud 2.0. And there was no margin expansion, no revenue expansion last year in zCloud. zCloud did a flat revenue growth almost last year with a flat margin also, margin growth also, because we were not able to onboard any much new customers on zCloud last year. That creation of zCloud 2.0 is now complete. We are busy with the meaty empanelment processes right now, internal processes, and we will continue to do that. So this year also, looking at the overall revenue of ESCONET, consolidated revenue, if you look at zCloud's revenue, it will be very, very insignificant. It may not be very different than what it was last year also. There still would be growth. The cash margins are good in zCloud, but since zCloud is a depreciation heavy, asset heavy business, depreciations will take a toll on the PAT in zCloud. And that's a fact of the business. I cannot change that.
No, that is okay. But can you tell us how much are we doing, 2 crores, 3 crores, 5 crores in zCloud? And
last year we did almost 5.5 crores in zCloud. And this year also we are expecting similar kind of numbers in zCloud.
Any reason we're not able to onboard enterprise customers because the available opportunity size is huge? And how much is the utilization on our current asset base in zCloud?
Okay, so utilization asset base, I would not want to disclose it on a public call as of now, and we do not disclose that number in public domain. Number one. Number two, why are we not able to onboard enterprise customers? So I would want to understand from you, how do you have that information that we are not able to onboard enterprise
No,
customers?
I am asking new enterprise customers, because you are telling the revenue growth, you are expecting them to be flat. That's why I asked, because
That's what my question is to you, Ashish. That is what exactly my question is to you, as to why, how do you know that we are not able to onboard new enterprise customers?
No, I'm asking.
Come down to my office. Come down to my office. I will. Since we have a by default NDA with each and every zCloud customer, we are not obligated to disclose names of customers. But yes, we have been onboarding enterprise customers quarter on quarter.
Got it. No, my question was,
cloud
because
revenue
the
is
revenue you expected to flat, that's why.
The cloud revenue is an annuity revenue model. You'll have to understand that. I cannot sell a customer 5 crore worth of cloud services on a single invoice. If it's a 5 crore deal, it has to be a 5-year deal. and 5-year deals with 1 crore revenue per customer per year. So every month, he will give me 10 lakhs only.
Got it. Got it. Can you please let us know a little bit about Hexadata? Like how is that growing and scaling and
Hexadata is growing,
helping you
scaling,
get better
and
margins?
Hexadata is growing and scaling. It is already on track, and the results what you are seeing now in the financial year results are a result of the growth there and Hexadata only. Mostly, I would not say only factor which is contributing to the bottom line, but yes, mostly Hexadata is a key enabler of margin expansions for us.
Yes, yes. Thank you very much. Just one last question on Hexadata. So I believe we have been making the service for quite some time. What kind of scale do you think Hexadata needs to reach for you to go ahead and invest into, into having your own SMT line for manufacturing the PCB as well? What kind of revenue does Hexadata need to reach, before it makes sense for you to go for that kind of investment?
I think you have a misunderstanding, Ashiji. There is no need for me to establish an SMT line ever. Why do I?
Even
See,
without so that
SMT lines is SMT. What does an SMT line do? SMT line is a tool to populate your PCB, and there is so much of spare capacity available in India itself on SMT lines. I can walk up to any SMT line owner and ask him, if you are willing to do a job work for me for 100,000 PCBs, he'll be glad to do that for me. So why do I invest on SMT lines?
got it. And so what does it take for you to become from a partner to, let's say, a OEM? Because I believe SMT and having your own architecture, these
We
are
are
two
already
things.
an OEM. We are an OEM for Hexadata brand.
No, yes, Hexadata you are making, but from a class 2 OEM to, let's say, a class 1 OEM, for you to get there, what does it need?
I think, Ashiji, we need to take this offline because I do not know the definition of class 2 and class 1 OEM.
Got it, got it. No worries. Thank you. Thank you very much.
So there are no other raised hands right away, and apart from the fact that only one question that what is expected revenue from completion, there is no other questions in the chat section as well. So the last thing I'm just once again announcing to everyone, if there is anyone who want to ask any question, just they can raise their hands. Tarun again is raising his hand. So Tarunji, you can just unmute yourself and ask your question.
Rajnish, I think we can keep this as the last question. Already I have another meeting at 5:30.
Yeah, am I audible?
Yes, Mr. Tarun.
Yeah, so should I expect Q2 revenue to be similar to Q1?
Mr. Tarun, go ahead.
Am I audible?
Yes, you are.
Yeah, I just wanted to confirm, should I consider Q2 revenue will be on expected lines as Q1?
Yes, I believe so. The pipelines, the CRM and the pipelines tell me that Q2 top lines could be slightly better than Q1 itself.
Got it. Thank you.
So there are no other participants who intend to ask any questions. So now we can further proceed to closer of the meeting. So thank you all the participants for your questions, suggestions, and valuable interactions. We sincerely appreciate your continued interest in ESCONET Technologies Limited and the time you have taken to join us today. We remain committed to maintain transparent and timely communication with our stakeholders and look forward to engaging with you through our quarterly investor communication initiatives. And on behalf of the board and management of ESCONET Technologies, thank you once again for joining us. Have a wonderful day. Thank you. Thank you, everyone.
Thank you.
Thank you.